It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, talking your real estate property news 7 days a week, including, of course, the best of the week on our Sunday, which is coming up very shortly. You can hear us on iHeartRadio, Spotify, Apple Podcast and Amazon. It is December the 8th today. I'm glad it's the weekend. Yesterday was pretty much a free day for me. Well, I say a free day, but I bought a new computer and spent all of yesterday just doing all of the transferring. It's the worst part, isn't it, when you buy a new computer and you've got to do that dreaded transfer. I did have an iMac 27-inch, but when I looked at the date of purchase, it was back in 2015, next year, and that's nearly here, 10 years old. So I've gone for another iMac, a 24-inch. The M2 processor is a pretty nice speed, I do have to say. So far, so good operating on the new iMac this morning. And it's been another busy week. So we'll cut to the chase and we'll get to some of those interviews from the last 7 days. We'll do that next.
Ready to step up your property knowledge? Access powerful insights with us.
She was talking about those house prices having risen for the 7th consecutive quarter by almost $15,000 or 1.5%. We are nearly at $1 million on that house median price for Brisbane.
I know, what a milestone, hey? Only another, just over $5,000 and Brisbane will hit the $1 million median house price club. And that is likely to occur by the end of this calendar year. And it is such a significant milestone. It's a psychological hurdle for buyers when you hit that $1 million median house price. We've got a bit of momentum loss though. Prices are rising. They're just not rising as fast as they were. But, Brisbane is one of the 3 capital cities that really is a standout performer and continues to see growth.
Yeah, it looks like, if you want to live anywhere, Simon, Queensland is the place, and that psychological barrier that she talks about, $1 million, very, very close now in Brisbane.
It is. It's inching that way. And of course, that means that a certain level of attractiveness for interstate migrants is gone, because part of the argument was always in Queensland, you do get more sun and you do get cheaper housing. And now you still get the sun, but you don't get cheaper housing unless you move from New South Wales, because Sydney prices are still much higher than they are in Brisbane. But all the other state capitals, they have essentially gained more attractiveness for residents compared to Brisbane.
Yeah, and, when it comes to making houses a little bit more affordable, there's this thinking that the demographic of politics could be kind of getting in the way of making some good policy. For example, politicians, are they really interested in making housing more affordable at the end of the day with policy? And you've got some thoughts on that.
Exactly. My argument is that if we imagined a purely hypothetical, cynical, self-interested politician, they have no reason to make housing more affordable, to be honest. Because if you wanted to make housing more affordable, this would mean that you would want to lower or freeze house prices. And still we are in a situation where 3/4 of the voters live in a house that they own or pay a mortgage on. So you only have 1/4 of the voters that are renters and that potentially want to become homeowners. You can't say, though, as a politician, well, let's forget about those pesky renters. We don't need to worry about you. You still need to pay lip service, and you then ultimately need to come up with policies that look like they might make housing more affordable, but they do the opposite. This is, if I look at a first home buyer grant, you give tens of thousands of dollars to a first home buyer, and then you tell them, please don't tell the market that you have this additional money, because otherwise the market factors it in. It's a dumb policy. Every economist in the country knows this, that it only drives up house prices. It's a waste of public funding. The only policy that is dumber is super for your housing, because it doesn't waste your own housing, public money to drive up house prices, but it wastes your own superannuation savings. to drive up house prices. But again, they sound good on the surface that you tackle housing affordability, but they do the exact opposite.
2024 has been good. It's been quite steady. Most, or if not all, properties have been selling. Like you said, some of them coming off a little bit, but still a lot of buyers in the market. It's been a pretty successful year, given despite a bit of negativity in the media, which they always love to exaggerate a little bit. But yeah, it's been very good.
Oh, what are you saying? The media exaggerates? I find that hard to believe, Samuel.
No, it's they just need a lot of stories. So, but no, it's good. Keeps everyone talking and keeps the property market very relevant. So it's good.
Well, that's true. The media does definitely stimulate the talking, so many talking points across 2024. And that brings me on to this, and that is the affordability and interest rates. That has really played a significant role across the Sydney housing market this year. From where you sit, how have buyer expectations evolved? For example, in tightly held areas like Rod Point, which you are only too familiar with, are people still willing to pay a premium for specific features or locations at the moment?
Correct. So Rod Point's a very interesting suburb of about only 550 homes, and all pretty much homes. So some of it is lined along the infamous Inner West Bay run that we have here, so waterfront reserve property. But if you looking at the interest rates from, say, May 2022 to June 2023, in 2022, Rod Point only had 16 sales. And then you look at 2023, where it's gone up to about 27 sales. So, we're looking at 10 or 11 more sales. So a little bit more stock on the market, a little bit more choice for the buyers in the last, say, 18 months. And I think that's been a big contributor, as well as linked with the interest rates being settled down now for just over 12 months, is really hitting the borrowing capacity. So those all things combined is probably why you're seeing those statistics of Rod Point showing a near 10% downturn. And also, obviously, as you can expect in 2022, when there's only 16 properties on the market in what is generally a very tightly held area, then you're getting premiums just purely based on the supply and demand, as well as the buying conditions in 2022 at, borrowing at roughly around 2%. It was the perfect storm for, premium prices. So I guess, where it says a downturn, I'd say it's probably just come back to a slightly more normal level. But yeah, like I was saying, and things are still transacting. I think people are understanding that with the competition and the amount of properties currently on the market. In 2024, we've had 23 sales in Rod Point, with 11 still on the market coming into the last couple of weeks of the year.
Yeah, and in terms of the turnkey homes, they're still commanding this premium, and the labour costs, of course, for building anything new is just a real headache. So it's all about those properties being ready to move into.
100% turnkey, you're still getting your more buyers on auction day, or more people interested and ready to pay. I think it's not only the cost of the trades, but also the availability, and especially coming into like end of year or Christmas time, where they're exceptionally busy. A lot of them are getting quotes to only start work, say, first or nearly second quarter of 2025. So you're spot on. A lot of people probably, weighing up the options. Do I put a second story on my home and renovate, or do I buy the turnkey option? And at the moment, I think majority are opting for that turnkey option. So that means more stock on the market because they're selling the home that, that they don't want to renovate, and then buying the home that is fully turnkey and ready to go.
Every week, unravel the real estate market to empower your real estate knowledge.
I'd like everyone to be a little bit careful with information like that, though. And the reason I say this is I've been in loan broking for 35 years and fairly intimate knowledge about how it all works. Things have changed a lot with how people borrow. And in the old days, you could say, if you've got X income, you can borrow X amount, because we know how much you would spend if you have one kid, no kids, whatever. But these days, it isn't done like that. And what they actually do at the bank level is they require you to declare everything that you spend as well as earn, and they base your borrowing capacity on that. In the day and age of zip pays and after pays because they're things that the banks really hate, and they factor those in as being a big chunk out of your affordability if you've got any of those. Credit cards, of course, make a difference. If you've got subscriptions to different TV streaming services, everything is included when they're considering your serviceability for a loan. So one couple who has a combined income of $150,000 may be able to get X amount of borrowing, and another couple may have a vastly different borrowing capacity, and it can differ by hundreds of thousands of dollars just based on what your spending habits are. So my advice to anyone going into 2025 who want to borrow the maximum amount of money that they can is to have a good look at your budgets today. Cast off any unnecessary expenses or expenses that you can do without for a little while, because you need to be able to show that for the past 6 months, this has been your budget. And if you can make your budget look as good as it can possibly look in the coming 6 months, by the time those interest rates do start to get cut, and I'm not going to say they're going to be cut either, because one of the things I've learned since the pandemic is you can't second guess anything. We can't be sure of anything, because we can't trust a single soul with what they say. We can't trust the economy. We can't trust other countries. We really don't know what the situation is going to be like next year. And those interest rate cuts keep getting pushed out further and further.
You say that you can't pick it for 2025. They might not come back. Of course, danger, trade tariffs, Margaret, trade tariffs, a world global event. I mean, it only takes one and all of a sudden the market looks pretty different. And I haven't actually asked you that question about the Trump aspect in the housing market and all of this.
Isn't that something that's very difficult for us to predict, because we have in the White House a person by their very history has proven to be reasonably unpredictable. So we don't really know how much of what he said he would do before he went in will come to fruition, and how much of what he didn't say will actually occur. But definitely the moment those trade tariffs start to come in, we start to see a global impact on the economy. And while we aren't quite as closely tied to the US economy as we used to be, we certainly are to the China economy. And I know that many economists are kind of at odds as to whether or not trade tariffs against China by the US will hurt us or help us. They'll either hurt us because China sees us as an ally and will want to punish us, or they'll help us because we'll then be able to export more things to China and actually make more money from China because they're not buying as much from the US anymore.
We are more than just a real estate podcast. Follow each week all of the main talking points and know your property.
Perhaps maybe just step over what the mindset is for people when they get into the market, into the UAE. Some of the differences for our Australian audience to sort of work out the differences between the two markets.
Well, yeah, thanks, Craig. I mean, there are many differences. The Dubai property market has gone through a very transitional period in the last sort of 22 years, because actually 22 years is only the time that there has been a real estate market. 2002 is when it opened up to foreign investment. And since then, we've had law changes, we've had legislations and improvements to the system, which protects the investor. And so now anybody coming to Dubai buying real estate is going to be safe in the knowledge that they've got a solid investment. Now, ever since COVID has come and gone, we have actually come out of that pandemic with our heads held high. And as a result, have actually attracted many different investors, especially the high net worth investors who are attracted to the safety, to the ease of doing business here, to the weather. Obviously, it can be a little bit brutal in the summer, but during the winter, it's amazing like it is now. They've decided that they're leaving all their troubles behind, whether they're in Europe, whether they're in America or any other parts of the world, and they're setting up businesses here. And as a consequence, the population is growing and the real estate market is also going great guns. And this has been happening happening literally since 2021. Every year that's passed, we've improved. So 22 was better than 21, 23 was better than 22. And this year we've seen stellar returns for our property market. The investment level is bringing a lot of eyes to Dubai. We are inundated with lots and lots of buyers.
So we talk about, the markets being different. I think, and we've mentioned this before, one of the key things about Dubai, without a doubt, is the level of speed that you've got to negotiate. Now, in Australia, people have got time, far more time, it would be said, than Dubai. So that is something that people certainly have got to get their head around, don't they?
That's right, Craig. But I need to just clarify that we're talking about the off-plan market. When you're talking about the secondary market, there is time. I mean, we can be fast there as well, but you do have time to think and obviously get your finances in order. When you're talking about off-plan and you go to these project launches, if you're not ready to make that decision, literally by the time you actually get to the desk, then you're going to miss out. So I'll give you a brief example. We had a project launch which sticks in my mind because we queued, we brought in the client, he sat down, we showed him the plans, we said, right, you can either go for this, this and this, and he was procrastinating, he was umming and ahhing, he wasn't sure, he wanted to go for it, but then all of a sudden he said, no, I need a cigarette, I need to just calm down, just give me a minute. So he left the room with my agent, they got into the lift because this was being held in an apartment block, which was on the 44th floor. They got into the lift, they came all the way down, the lift door opened on the ground floor. And by that time, he said, do you know what? I'm just going to go for it. They got back into the lift, went back upstairs. And by the time they went back into the room, those units, should I say, had already been snapped up. And he was absolutely livid. He was obviously he was livid with himself, but he was more frustrated with the market. Now, I'm not going to say this is an isolated case because that was one that sticks in my mind of how rapid it was. We've had other situations where people, say, let me think about it, and they come back 1 or 2 days later. And unfortunately, the unit has gone. And so all I would say to anybody, if you are not ready to pull the trigger at the launch, then to be honest with you, you're probably not ready to buy the off-plan market here in Dubai because it is so fast-paced.
We connect you to the best real estate information across Australia. The Real Estate Podcast.